Yeah. Hello and welcome. I am your host, the best podcast host in the universe, Steve Cully. I'd like to thank our sponsors at Procyon Partners. Procyon, one of the top 50 fastest growing companies in the nation. They specialize in employee benefits, wealth management, and retirement planning. President Sean Rabinowitz, proud supporter of our podcast network and everything we do. Green Street Trust International, owned and operated by Rennell Jump and UConn legendary men's basketball player Jake Voskuhl. They specialize in tax plans for businesses large or small. They will save you money or get you a big fat return on your taxes. To schedule your free strategic tax planning session today, go to www.greenstreettrust.com. Pete Finch and the Finch Law Firm is located in Bridgeport, Connecticut. If you've suffered any type of personal injury, slip and fall, a car accident, your mother-in-law ran you over with her car, your wife got angry one night and decided to stab you, the Finch firm is for you. Pete has won legal battles all across the state of Connecticut. He will go to war to get every dollar you deserve in compensation. You just have to remember, in a pinch, call Finch or go to his website, thefinchfirm.com. Dynamic Human Performance is owned and operated by UConn legendary running back Andre Dixon. He trains boys and girls of all ages, all sports. He has a boot camp program 7 days a week, 6 a.m. You want to get in shape, you go to Andre. He has an athletic development program where he trains boys and girls in the sport of their choice from the ground up, helps them reach their full potential, be the best they can possibly be. Andre has sent boys and girls to college on scholarship for all different types of sports. To work with the best, he has a 5,000 square foot state of the art facility in Hartford, Connecticut. Go to www.dynamichumanperformance.com. All right, and we are here for Luther James Insurance with the man himself, James Whitfield.
Good
Great
morning.
to see you, James. Yes,
morning.
yes, it is. So I had forgot we did have a couple questions that came up, and I did not get to them. So, what would you say? The first quarter of 2026, investors, people buying insurance. Why would you say, um, you know, most people have played things slow, have sat things out? Why do you think they do that? And how can investors win, by getting involved with insurance, by getting involved with other things, by acting early instead of, waiting as the year goes on and the year develops?
I think what it is, especially with so much uncertainty coming from the government,
Right.
um, people are on the fence. But the cool thing with life insurance is if you have a properly built policy, you have nothing to worry about because you won't lose your money. It's not like the market's going to crash today and everything gets wiped out. And with insurance, your money isn't even on the stock market; it's on the S&P 500, which never, for as long as I've known it, it's never dropped to the point where it crashed. So your money makes a percentage of the gains on the S&P. So if the S&P does 200 points and your policy it might be you might be making 10 points on the S&P, you're going to make your 10 points out of the 200 points. And if it crashes or
Right.
if it goes down, it's at the zero floor, you lose nothing. Your money stays the same in your policy. So there shouldn't be any uncertainty in that regards. It's the safest
So,
thing for you.
we've talked about the good old Affordable Care Act,
Ah,
and it's we're close to going into February almost. I mean, it's right around the corner. Um, when do you think they're going to have this figured out finally?
well, from what I saw in the news, it was supposed to have been January 1st where everything changed. And a lot of things changed. And again, hate talking politics, but
No, it's not politics. It's work.
I read something where, and I don't know if it's true or not 100%, but like some Republicans came across the aisle to reinstate the credit the credits for the Affordable Care Act, the Obamacare.
Oh yes, I did hear about that. Yes. So I mean that's a good thing, right?
Absolutely, because
That's
then
what
it
we
makes
need.
everything cheaper.
Yeah.
Yeah,
Okay.
because like last year, I had a couple of clients. Like I had one woman who was paying, I think something like 229 a month or two 40 a month on her coverage, and for the same plan this year, it's like $600. Like
Wow.
that's yeah,
Oh,
yeah,
so I mean that makes a huge difference.
very,
That makes a huge difference.
very.
And again, it's not something that makes you a ton of money personally by
No,
working with it either.
I
You
mean
just
I'm
do it to
all with,
help people.
yeah, exactly. I'm all with helping somebody out, but it sometimes the juice isn't worth the squeeze. You
No, I get that for sure. I get that for sure. Um, the other thing was, people are innately impulsive. They want that instant gratification.
Yep.
So, somebody asked with insurance, I mean, you have to, you're going to get a payoff. You're going to get a great payoff. You're going to get taken care of for life. Um, how do you describe telling people you need to have discipline, you need to have patience when
Well,
you're selecting a deal and working out a policy?
well, there's no quick fix to anything, and especially the fact that you're putting you're building this policy up for the future.
I'll be right back. He's just connecting his microphone in his stream. So I'm Steve Cully, and I'm running for Congress. I'm the best choice out of everyone. Um, I was publicly smeared and attacked. There he is. Okay.
Happen. I don't know what
That's
happened.
all right. So you're all good. You're all good. But yeah, the discipline and patience aspect of it, because like we said, instant gratification
Yeah.
people are impulsive. How do you handle dealing with that when selling a policy?
What I do is I explain everything black and white. I can't even do anything gray. I can't do anything that's ambiguous. Um, Depending on the age, I always tell people, listen, if you're a certain age, it's going to fall like this. If you're older, it's going to happen like this. Or like I have people who try to nickel and dime their retirement, and I tell them outright, you can't expect you can't expect to have a good retirement if you're going to nickel and dime yourself right now.
No,
You shoot
no.
yourself in the foot. Oh, I can't afford this. And I get it all the time, and I tell them, if you can't afford it, then we shouldn't even have the conversation.
You shouldn't even be talking. Yeah, I mean, it's just time is money,
Yep.
and for you to be putting in the time like that, and the person is like, oh, well, I don't have the money to afford it.
Yeah.
That blows me away that someone does that.
Yeah.
Um,
Everyone
the
wants to spend that money today, but it's just like you said before. There's a discipline in it, and I like to show the good and bad when we're doing business. So if you say to me, "Hey, I can afford X amount a year," I'll try to make it work. And it's not about me; it's about you, because you're the one who's paying for the policy. I'm not. I'm just writing up what you give me, and
right.
how I how I build it through the system is how it's I can't change anything.
No, exactly. That's the biggest thing. You cannot change anything. It's the way it is.
Exactly.
Um, so when people are strategizing how to invest their money,
Hmm.
and we've gone over insurance, we've gone over the safety of it, we've gone
Yep.
over the structure of it. Um, how do you go about dealing with people, separating kind of their expectations and speculation from strategy, from putting a
Well,
strategy together?
what I like to do is I always ask people, what is it you can and cannot afford? If you can't afford it, then
So
you know,
that's number one,
yeah, because I'm not going to put you in something that you can't pay for.
that you end up defaulting on.
Yeah,
That's the worst thing that can happen.
exactly,
Got you. Okay.
exactly. So sometimes I've come in under and I've performed very well. You know, some cases I've overpromised. I've never over. I'm sorry, I over
You under
delivered.
promise, over deliver. That's
Yeah,
Laban's favorite line. Yeah.
exactly, exactly, exactly.
But
But
but that's like, I mean, when you have a meeting with them, you really do put together
I do,
a strategy,
I do, I do.
and you try to manage expectations.
Well, I tell people outright too. Listen, if you're 40, 50 years old and you're telling me that you can only do $200 a month on a policy, I'm telling them right now you're talking to the wrong person. Because
Right. Because
all you're gonna do at that point is just have a nice death benefit, but you're not gonna have any real cash benefits with the policy when it comes to regards of borrowing.
you,
So
I mean, you're going to get the final expense insurance,
it's
right?
better you're better off. If you're telling me I can't pay but X amount a month and it's not giving you a significant return, then yeah, go final expense, because then at least you're covered by the time you pass away.
So why don't you put up your plan that you have for one of your clients, so people
Oh,
can see another example of
sure.
what you're capable of doing? And this is even with a different amount of money,
Yeah.
which I
So
think is huge, just to show that what you can put into it. I mean, even if you don't think it's huge or a big financial windfall, you
correct.
still can collect, and it's going to appreciate over time.
Absolutely. Is this the one? So all right, so you guys can see this. Is it good enough
Yeah,
on?
I got it right there. Yep.
All right, so I won't expose his name,
No,
but
that's fine.
he's a professional athlete. And when I say professional athlete, he's not an NBA player or anything like that. He's just,
No. Right.
yeah, he plays soccer. He plays American soccer, and he makes, I think, roughly somewhere in the $60,000 to $80,000 a year range. So I spoke to him. He's 24 years old. We're going to do $15,000 a year. He's got a death benefit of $361,000. So if something happens to him today, his beneficiary would get this 361,000. Now, along with this particular policy, It gives you living benefits. So that's critical, chronic, and I forgot the other issue. But for argument's sake,
Well,
if you
I
could,
mean, chronic ailments, yeah.
yeah, anything critical. So God forbid he got cancer. They'll take
Right,
none
right.
of his death benefit and give it towards the cancer benefit, to pay for his treatment. You know what I mean? So
Right, 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 right,
God
right,
forbid, God forbid.
right.
So
Of
what
course.
what I did was we put it in the S&P 500. He's going to get 50% on the point to point. He's going to get an additional 5% on the Fidelity multi-factor yield, and he's going to get another 50% on point to point with S&P. All right. So what I did was he's 24. He's 24 now. We did 15,000. We're doing this for 10 years. He's paying, and this is being very conservative. So he's
Yeah,
paying.
yeah, that's what I'm saying. Yes.
Yeah. So he's paying $150,000 for 10 years. Okay. Now, after that 10 years, he has $185,000 in cash, but this is compounded interest. His death benefit goes from the 300, what did I say, 320 something thousand?
Yes. Yes.
Yeah, the 361. So his death benefit went from 361 to 546 in 10 years.
So that just shows right there. I mean, this is 15 grand,
Yeah.
and this is how much you're gaining from it. That's
Yes.
a tremendous amount. Now,
Yes.
someone had asked, do they necessarily have to put this in all at once, the 15 grand?
It would be easier.
It would be easier to do it that way.
It
Okay.
would be easier. I mean,
And-
you're talking $1,250 a month, $1,250 a month monthly.
right,
Um,
right, right. Exactly.
you know, I'd say cut the cord if you can
If you
do,
can do it, just do it.
just do it, or do it 3 months at a time. Just keep paying into it until you get your 15 grand. So now he's letting it sit, right? He's letting it ride over the market. So at 44, he's got another 150,000. So he went from $185,000 in cash in his first 10 years to now 20 years. He's got $340,000 in cash.
Wow.
Right.
Wow. Yeah.
But it gets better because at any point, he's able to borrow money out of this if he needs to. So if he need to buy a house, he can take a deposit out of this. He can pull out some money to withdraw for a deposit for a home. If you wanted to buy a car, he doesn't have to go to the dealership and get a loan. You can pull it out of your policy, buy the car whole, unless you're buying a
That's what's so
Lamborghini.
crazy. Yeah.
If you're going to buy yourself like a $50,000-$60,000 car, you can pull it right out of your policy. Now, if you're going to turn around and buy yourself a Lambo, you've killed your policy.
So this is $15,000 a year. You're getting a very good return. You're getting good appreciation over time.
Yeah.
What would you say? Like, someone comes to you and says, "I can do $5,000 a year." Is that worth it? Is that going to get you the same?
Depends on how old they are and their health.
Okay. If they're young and healthy, $5,000 a year is doable, or
$5,000 a year is doable, but it's not beneficial.
okay. So what would you say would be the cutoff for you, to do a plan, how much they would need to put in financially a year?
It depends on the age. So for argument's sake,
the young people, yeah.
So if you're young and you're like 25, 30, I'd say on a high end between 30 and 50 on a high end.
Right.
This guy's 24. So, he did 15,000. And I specifically asked him, I says, listen, can you do this over a period of time? Is this fine for you that it's not going to, kill your
Right.
pockets? He says,
Right.
fine. He says, perfect.
Right. Right. So I mean, and other people have asked. People innately get uncomfortable talking about money.
Yep.
So, I mean, for you, I mean, especially, you're basically a psychologist here, having to talk with them. Like, it's tough to get the real answers. It's tough to get them to talk about and open up about money, right?
This guy, let me tell you about this guy. He wanted to do $5,000.
Okay.
And I'm probing because he has 15,000 in a Fidelity account that he created. So it says, listen, you have 15,000, and by the time you're ready to pull that money out, it's going to be taxed. Would you like me to convert that money into a policy?
You can move it,
yeah,
without tax.
penalty. Yeah, I mean,
Oh,
he may incur some kind of penalty, but over time,
right.
the life insurance covers it. But
Right.
I said to him, I says, listen, why don't you just put the 15 grand into an IUL, which this is, and
Right.
and can you afford to do 15,000 over a period of time every year? He says, yeah. So I said, all
Okay.
right, so let's do it this way. So by the time, let me show you his money that he's going to get afterwards, because these things pay out a yearly income if you structure it properly.
Yes, that's what I think is the most amazing thing about it is you're getting income
Yes.
over time.
So
you're
at
getting
50,
paid like you're working.
exactly. So now at 55, he has $685,000 from 150. Right? And that's at 65.
Wow.
By the time he is at retirement age of 65, he's going to collect for the rest of his life $127,849. Now, this is very conservative. At that
that's
point,
just off of 15 grand.
That's off 15 grand.
Yeah.
He made $1.3 million.
Right, which he can pull out and play around with to do whatever he needs to do.
He can do it this way, or he can space it out this way. Me personally, I like to have the flexibility. So at 75, his policy's not making any more money anymore, but it's still paying him. See all this?
Oh, I see what you're saying. Okay.
It's still paying him because it's still collecting compounded interest. Now, he's not going to be here at like 94, 95 years old, but if he puts it in a trust,
right.
$10 million.
Right.
Tax
right.
rate.
Right. Right. So that was another question. So you put it in a trust.
Yep.
And
it keeps paying.
If you want to you want to keep that trust going, you can keep it going.
Yes. And the policy, and you let the trust be the beneficiary of this policy. At 118 years old,
yes,
55, almost 56 million bucks.
And the trust, like, you can distribute it yearly to people, right? You can structure it that way.
You can do it yearly, you can do it monthly.
Right. This is what you get per year for the length of the trust until the money runs out, correct?
Correct. And now he'll be at, it's going to pay till he's 120 years old, and that's the cash.
Okay. And for this was asked by somebody interested in getting into insurance. For someone interested in getting into insurance, for an agent, is it better for the person to have longevity, or is it better for them to go quickly?
It's better to have longevity.
So as they continue to make money, you continue to make money.
Absolutely. I mean, listen, when this person passes away, God forbid, I'm still going to be collecting, because every year that
okay.
Yeah, I make money on it.
Okay. Does it have to be over a certain period of time, like 20
Um,
years, and then you'll
it
continue
depends.
to collect?
So it also depends on the contract I have with that carrier.
Okay.
So it's all different.
Okay. It's all different. But then again, I mean, that is really important to show people that $15,000, like, I mean, because people think that, they're not able to afford something like that. And $15,000 really is not that much.
It's not.
And
And for
what you're
those,
gaining off of it is
it's insane.
huge.
And
Yeah.
and I tell people who have money in a 401k, um, I'd rather put it in insurance than in a 401k because it's on the market on the 401k and it goes up and down.
The 401k, as
It's a
I
hustle.
was I was talking to when I was talking with Laban and Nedvan yesterday, and a couple of my other friends. I'm like, I've learned more about life insurance and real estate and business in the last 4 months than I've learned in my entire life. Like I had no idea about any of this,
Mm-hmm.
which is crazy, because that's what I think most people don't realize is the benefit that they're getting from putting money into a
Yeah.
policy and how much it actually pays off. Like
So
you're getting such as, and it's safe and it's
yeah.
tax free.
So we all know who the Rockefellers are, the Rockefeller family.
We do.
This is how they built their wealth. Walt Disney
through
through life insurance. Walt Disney, same thing, life insurance.
through life insurance policies. That is how they built their wealth over time.
Yep. And banks
Just
do it too.
growing and growing. Okay.
Yeah. Banks do it too. So what they'll do is, and I'm just going to pull figures out of the air. I'm not going to pull exact figures.
Sure.
So let's say they put $1 million into a policy, right? Now it's sitting in a policy collecting compounded interest. They're borrowing the $1 million they put in there, right? Now it's separate. So the $1 million they pulled out belongs to the insurance company.
Right.
Okay.
Right.
They then redistribute that million into loans. So it'd be credit cards, mortgages, uh, auto loans at a higher interest. This is how they make their money. They'll put that $1 million back into the policy and let it grow some more and keep doing this over time. That's how you become
Right.
rich. That's how you become rich.
That's how you we've talked about this. That's how you generate generational
Generational
wealth.
wealth.
Right.
So if you're putting $5,000 in there and then you borrow $5,000 back and put it back in the policy, are you really doing anything?
No, you're the tide's coming in, the tide's going back out. I mean,
Exactly.
that's really all that's happening.
Exactly.
What are investors can be fickle with what they do and what they want to get involved in. How do you help them to differentiate between some of the short-term noise compared to these long-term opportunities? Because, like I said, instant gratification, impulsivity, you know, that's that short noise that they hear.
They're used to doing things like day trading and all that stuff. That's
Oh
instant.
God, yeah. Right.
But if you have a bad day with day trading, and it's all experience. I don't have experience with stocks.
No.
I don't like paying capital gains if I made a good chunk of money. I don't believe the government is entitled to my money. That's just me personally.
Exactly. That's what they do. They just they create nothing. They just take. That's all they do is take. But no, you're right. You're 100% right. But I mean, when you're meeting with people and you're trying to explain to them, and they may think, okay, well, I have a 401k, I have a pension, I have this mutual funds, and they want to go in that direction, but you're like, okay, long term, these are the opportunities you have with them.
Yep.
How do you go about getting them to shift their mindset over to the long term opportunities?
I pretty much show them the benefits. So something like a policy like I just showed you guys. Um, this is a conservative case.
That's as conservative as you've shown.
Remember the one
It
that I
pays
showed
off.
you with the guy who's I did 100 grand and
Yeah. You had 100 grand to put in. Yes,
yeah. So I did what 50,000 one year, 50,000 the next year, and then borrowed
correct.
50,000.
Right. You get the loan.
I had
Yes.
and at the end of the day, I think because he was another one. He's like 26,
Yes.
and at the end of his pay, I think we did it for 20 years. At that point, he got like 6.6 million bucks cash out of
Yeah.
that, and that wasn't even the tip of the iceberg, because if he waits till he's like in his 60s, like 61, 62, he has $25 million
Coming right his way.
from 100 grand.
Yeah. Yeah. That's why people need to understand the long term value and
Yep.
opportunities of these policies. And again, we're talking about, this isn't term life insurance.
No,
This
it's
is
whole life.
whole life insurance.
This one in particular, I call it whole life on steroids.
Yeah, well, yeah, for sure. Oh my God. But and again, you don't mess with term life insurance at all.
I'll
It's a
do
waste.
term. I'll do term for specific reasons. I barely use it, but I'll do it for
Right.
specific reasons. I'll do it where uh if I'm giving their kids insurance, and like if I write up a policy for the kids, the parents have to be insured.
Right, of course.
So I'll get, oh, I'm insured for my job. I says, listen, you lose your job, you lose your insurance, and that's group insurance. You're only getting 50 grand if something happens to you. You're not getting
Right,
a mint.
right. So you have been doing this, I mean, relatively, you're still new. I mean,
Mm-hmm.
3 years,
Four
and
now. Four.
you're going on your fourth.
Yep.
What role would you say continuous learning, and adaptation plays in maintaining a successful mindset, and how does that help you with people that you're working with, or people who do want to invest?
So what I do is, and I've learned this very early, surround yourself around like-minded people.
You're judged by the company you keep. 100%.
That's one. I one of my partners now. I met him 2.5 years ago in a group, and he's the one who showed me to do these higher priced policies, because he showed me the benefit. I didn't know you can do all of this. Now I've taught myself how to write these policies by watching YouTube.
So you can watch a YouTube video and it'll teach you how to draw up a policy.
Yep.
Wow. That's amazing.
Well, they didn't show me how to write up the policy. Like I had the
you have the template. Yeah.
Yeah. Well, I learned to write it was I contacted the carrier, and somebody over the phone showed me how to do it. And then I learned the tricks of the trade when I met my partner.
Right.
So my partner does.
You had a mentor, basically.
Correct.
Okay.
Correct. And we have weekly group meetings, like every Tuesday and every Friday.
And is your partner someone who was like a long-term friend?
Oh yeah.
Or anything?
Was he a long-term friend? No. He wasn't.
Oh no, he wasn't.
No. no. I met him.
When
He
you were
showed us.
when you were in fashion or cable
No,
or
no, no, no. When I got into
oh
business, yeah,
okay.
when I got into the business, I met him. I met him through somebody else. He has a group for high net worth individuals.
Right.
So this guy makes literally 50 to 60 million bucks a year.
Right, because he's drawing up huge policies.
Yep.
And
Yep.
you were able to get in this group, which
Yep.
was huge.
Yep.
And he
After talking
was
to
open
him,
about sharing everything.
exactly. He didn't hold anything close to the chest. That's why that's one of the things that I respect about him. He's
That's
willing to share.
amazing.
It is. He's willing to share without saying, "Hey, pay me 10 grand
Right,
and I'll show
right.
you how to do it."
And
And he
I'll
could.
get you.
He could.
Right,
Because
right, right.
honestly, I'd make that 10 grand back on one deal.
Right. Because the information is so valuable, you would make it
Exactly.
back right away.
Exactly.
And I was talking to I did a show yesterday with Belcour, Robert Belcour, and he
Mm-hmm.
was telling me that I should do life insurance. And I
You
said, I don't
should.
know, I'm not as smart as James. I don't think I can memorize the answers to the test as fast. But
I told you. I
so
ABC'd it.
how often is the test offered? Is it weekly? Is it monthly? Is it a
The
couple
test
times a year?
is offered all the time. Well, it depends on who you sign up with. So sometimes it's
Okay.
like every 2 weeks or a month. It all depends on where you go. Now with a job like this, because you're doing stuff that's regulated, you have to take training every year.
That's why I said like you have to take continuous learning
Yes.
throughout the year and training
Well, it's
because
training, so it's more like just being compliant with
the
you
new
know
laws, anything that changes, right?
correct.
Because year to year, like we're talking about the Affordable Care Act. I mean,
Yeah.
it's changing, so you're
So
gonna have to learn about that.
like this year, I didn't do Medicare
Well,
because
you can't, and you're doing it because
I'd have
personally
to
you care about the people.
right, and on top of that, I'd have to do a training, and I honestly didn't think the juice was worth the squeeze this year.
No. It's not worth your time. You're
No,
putting in all this time to do Medicare policies when you're being paid minimally off of them.
yeah,
Correct? Yeah.
correct. Like why should I if I'm gonna make 35 bucks a deal, why am I busting my behind?
You shared two examples. Can you share another example of how a strong investor mindset, someone who's willing to go all in with this and put in significant capital, led to success? And maybe it was in a previous year, but how it's going to lead to growth going forward.
Let me see what I got here. Hold on. Let's see here. Hold on. All right. So, ah, this one is what's called a 401k rescue.
Oh, okay. I like that.
So what we did was we did what's called premium finance. Okay, meaning that we take a loan out. Like he makes a certain amount of money a year, and he has a certain net worth, but he had money sitting in an account, um, doing diddly squat, wasting time. So he's 55 years old. Uh,
Right.
hold on. Let me do share screen. Are you able to see anything?
Yeah, I got it right here for you.
So he's 55 years old.
Oh, so this is good. Okay. Oh, sorry.
He had $500,000 in his 401k, right? So
Oh,
yeah. So now we're gonna get him 123,000, just like the young man that I wrote up, but now this person's got more money, right? So
yeah. Oh, yeah. Holy
he's
crap.
he's getting 123,000. But he's also doing a loan on top.
Yes.
So this 100,000 each, where you see this, this is his 500,000. We're putting it towards taxes. So he's pulled money out of his 401k. This is going to cover the taxes from pulling out his money, right? So we're doing 100,000 a year for 5 years. That's his $500,000. He's also getting a loan of $300,000 for 10 years. So now he's got built already 3.5 million in his policy with cash. But what happens is that money's going to make that money's going to go for 15 years almost.
Jesus.
That 3.9, that was his loan. That was his loan with interest that's paid back through the policy.
Right.
Okay. Now he has to let this sit a little bit more.
Yeah.
Here's his 123,000 a year.
Correct.
At age 69. But you see the cash value that he has?
I do. I sure do.
Now,
that's amazing.
This is going to go.
Who's 55. Yeah.
For someone who's 55. Now, if he was younger, the numbers would be this cash value would be super huge.
Yeah, it'd be astronomical.
Now, what's this one? This is another version of the same policy, but we did it where he gets 244,000, and we borrowed more money.
Right.
375, yeah, and then
So you're borrowing the money based off of the 401k, correct?
No, the 401k is paying his taxes. So
okay.
Yeah, the 401k, and it doesn't have to be like this for every case, but it just happens to be for these because this person is older. This person's 50, as opposed to the other one at 55. All right, so we borrowed 375,000 for 5 years, and then we went 350 for the next 5. Everything got made, everything rolled. It keeps rolling for the year. It's paying back $6 million.
Wow.
But here's his taxes: 100,000, 5 years, $500,000. That's what he contributed.
Yeah.
But the distribution, the total distribution.
I mean, when you're older, you would have to because you missed out. So
this is why I say you can't do 5,000 a year.
Right.
That's BS. That's BS. But this is better than any annuity. He's getting $244,000 for the rest of his life, tax free.
Now, could this also be in a trust?
Yes.
Okay.
So if you do it in a trust, you're better off doing the cash. I mean, you can do it where you do the payments. You can do it where you do the payments, but you want the payments or
Right. So I see.
Here's the cash. Actually, I'm sorry. Hold on. This is the cash. This whole row. So
Jesus.
Yeah. See those numbers?
So that's why it's better to do it this way.
Yeah. Now not everyone's going to qualify for premium finance. So in this case,
you said that, right?
Yeah. So in this case, if you're over 50, you have to have a net worth of $5 million. Now, If
Right.
you're under 50, if you're like, 25 to 47, 48 years old, you just need to have a net worth of 2 million and have a good six-figure income.
Right. Right. Okay.
And these are rare cases. This isn't every day.
And now, is this someone who is still working at
Yeah.
55?
Yeah.
Okay.
Yep.
Um, you know, that was one of the other topics, um, because retirement isn't obviously, people think it's an age. It's not an age. It's a financial situation where you're
Listen,
able to do so.
if you build your policy right, like I met a girl when I first started doing IULs. I met a nurse in the Bronx, and she at the time was like 34, and
Right.
she said she didn't want to be like some of the older women there, still changing bedpans in their
Yeah,
60s.
I know. Yeah.
So she did 7,000 a year. Like actually, she did something like 7,200 a year. Um, I got her an income of I didn't do the income part, but I did the cash build up. By the time she is 45, because she said she wanted to leave at 45, she had almost 600 grand in there.
Ha! She wanted to leave at 45,
Yeah,
and you pulled it off.
yeah, because she did it early. She did it early.
I mean, that's amazing. That
Yeah,
is
that was only
absolutely
600 bucks a
amazing.
month. 600 bucks a month. She's putting in 7,200 a year, and she has no
Um,
kids, no nothing.
what would you say, you know, with the money that the people can use and pull out? And I know that you're not a financial advisor, not a financial analyst or anything, just a public service announcement. Or, for investors,
Mhm.
if they pull that money out and they want to invest in something,
You can.
what would you say would be a good investment for them? I mean, is it real estate? Is it starting a business? Are
It,
there
it all
different
depends
things they
on
can
what your
do?
passion is. It all depends on what your passion is.
Oh,
So like you can
really?
use this
Okay.
you can use this money to go buy a business, you know?
Yeah, that's what I'm saying. Right.
Yeah.
So you can.
Like
But
I for one, I wanna have a couple of laundromats. I wanna own
like
a couple of
fresh,
laundry. Yeah, yeah,
there's
yeah,
always a need for them.
yeah, yeah.
Yeah,
Like you can go buy a business, especially like a laundromat, you can buy it for 50, 60,000. You can buy it for $1 million.
you can.
Depends
Yes.
on, yeah. It all depends on what you're willing to put in. But I like this way better because I don't have to go to a bank and show a business plan and tap dance and hope I get it.
Oh, I know. Jesus, the hoops you have to jump through.
Yeah.
And we were talking about grants yesterday, and to get a grant for the government is like getting an enema. I mean,
Yeah.
it's just like,
Yeah.
and then you
Please, sir, may I
see
have some
the
more?
then you see the Somali daycare thing where they just hand out the money.
Hmm.
The 185 million a year going to the daycares, and no one's checking to see if they're actually open.
Yeah, where was I on that one?
They got the money. Anyone else, if you want to get the money, you just can't do it. You just can't
Yeah.
do it. The last question I'll ask you: the importance. We talked about a little bit more. Uh, People have asked goal setting for the new year,
Yep.
2026. Um, do you personally set goals? And I think you said that you do.
All the time.
We talked. We talked
I do
about
it
them.
yearly and monthly.
You do it yearly and monthly, and you actually write them out, correct?
Yep, correct.
Okay. Um, what?
It's always, not to cut you off, Steve. It's always good to write them down because then you
Yes.
can go back to looking at them. Don't do mental
Yeah.
notes.
No. No, I agree. You have to write them down.
Write it down on a
Um,
piece of paper or put it on your phone in the notes.
what what is good about setting goals? And do you do kind of realistic goals, And then do you do more lofty goals or do you do both?
A little of both. So what
You
I
do a little
do
both.
is I set goals so high that if I come under and it's a good number, I'm happy with it.
Right. Right.
So one of my goals, and I'll share one. One of my goals was to write up in business every month, anywhere between 200 and 300,000.
Right. Right. No, I got you.
That's one of my goals. But here's the thing: if I turn around and make 100, 150, you total that over a course of a year. If I did 100,000, what did I make? 1.2.
Yeah.
Are you gonna cry at that?
No, I'm not going to cry yet. All right, we're gonna take a quick break. I'm just gonna run a couple of our sponsors, and we'll be right back.
Cool beans.
Down south, we have the Trench Mob, run by Julius Williams in Decatur, Georgia. He trains offensive and defensive linemen. They compete in 5v5 tournaments and college showcase camps across the country. Julius has sent kids to schools like Florida, Florida State, Miami, Tennessee, Clemson, Georgia, Alabama, just to name a few. We have the Trench Mob podcast every Wednesday night at 8:30 p.m. If you want your kid to go to college and play Division I football and be trained by the best, you go to the Trench Mob. To contact them, go to www.battleofthetrenches.com. Ned Von Young owns Fresh Fold Laundry Company down in Chapel Hill, North Carolina. It's a high-end laundry service. They wash, dry, and fold your clothes for you. They have a pickup and drop-off delivery service, so you can have your laundry done in the comfort of your own home without ever leaving. You put your laundry in a clear plastic bag, put it out, they pick it up, everything is done, wash, dried, and fold, and it is dropped off to you within 48 hours. They offer an expedited service as well. They have an online subscription model. You can also book online to schedule your pickups. They have deals for college students. So if you're in college, wash your nasty ass, and you can go to their website. It's myfreshfold-laundry.com. All right. Yeah, so I split things up a little bit just to make it a little bit better. But I mean, so when you hit a goal in 2026, how many goals do you typically set for yourself a month?
It all depends on the situation. So,
Okay.
like one of my things that I like to do, especially early. So let me set out a disclaimer. I haven't made 100 grand a year yet, a month yet. I have not. So I don't want
No,
anybody thinking
we're gonna get there.
exactly. But I'm looking to buy a home, and I says, well, for me to get a home at this price, I need to make this amount of money.
Correct.
That's how, that's kind of
That's kind of how you're setting it. You're basing it around buying a home.
Well, that's one of my reasons. The other reason is, at some point I want to turn around and fly private, because I've done commercial flights. Like not last year, but the year before last.
Can I get in on that with you, please?
Yes.
You want to get a charter plane?
I can do one or two things. I can go charter, which there are some there are some charter flights that are not as expensive as it sounds.
No, they're not. I know.
I'm just not getting champagne and stuff, but I'm just saying, there are.
Are you talking more buying a Learjet, something like that?
I would love to.
Okay.
Now, there's a guy in Boston that he has a program where you can get a plane for under $3 million, and he'll charter it.
Wow! So he'll do it himself.
Yeah, he'll charter it, and when you're ready to fly, you fly.
My guy in Connecticut, I got to get you in touch with because he's a billionaire. He's got a Learjet. Maybe he has someone as well. The house that you're looking to purchase, is it going to be in Connecticut?
No, no,
So it will be in New Jersey
it'll
because
be in
you said
Jersey.
you need the Jersey address
No.
for insurance. Oh, I mean, you said you need to have the address where you're going to get the insurance.
Oh, absolutely. Yeah, but
Right.
I have an office address, so I'm not worried
Oh,
about.
I got you. I got you. I got you. But
But for
you're in Connecticut quite a bit.
a lot, yeah,
Okay, good.
yeah. But
Um,
but like for me, I said I wanted to fly private because I have one
it's a
experience too many, and
nightmare.
it's not just with a certain airline. It's the whole process of
It is.
being there 3 hours ahead of time, and you're stripped halfway naked to go through the metal detector. I don't have time for that.
No, no, it's awful. It's awful. All
Yeah,
right,
I don't
I'm
have
gonna
time.
play our last sponsor,
Okay.
but yeah, I want to get on the Learjet. I'm all for. Finally, we have James Whitfield of Luther James Insurance. For the last 3 years, James has dedicated himself to the art of financial services. He specializes in life insurance and insurance policies. He will save you money, make you a boatload of money, and do so tax free. He also specializes in retirement planning because we know the stress that goes into thinking about retirement. How much am I going to need? For how long? Do we have enough? Because fear of the unknown is real. To contact James, go to www.lutherjamesinsurance.com. Okay, so February 25th. Do you know? I know you go by your calendar and it's a long ways off. Do you know if you're going to be in Connecticut?
Um, February. Let me look at my calendar real quick. That's a Wednesday.
Yeah, that's why I wasn't sure because it's during the
Um,
week.
so far I'm free.
Okay. All right. So I am coming out. We're gonna go to a UConn basketball game.
Okay.
So if you want to go, I will get I'll get you a ticket. I'll try to get your girl a ticket too if she wants to go as well. Um, and I'm staying a few days, so
Oh,
uh,
nice.
yeah. So if you come out, we can hang out and you can meet a couple people too,
I appreciate
some
it.
of my friends. But yeah, but great job on the show. Um, I I'll talk to you after we kind of have a plan worked out for what we're gonna do. But great job answering the questions and providing people with answers, especially as to why they should not sit back and wait this, start of the new year
Yep.
and, be aggressive with investing, be aggressive with what you're doing, look into the advantages that you're getting from the life insurance policies that people don't realize. People think life insurance, as we talked about, is a death benefit. You put it in a death drawer somewhere and you forget
Don't do it
about
for
it.
the death benefit unless you're buying
No,
insurance.
no, no. That's the craziest thing. But that's what people think. Then
Yeah.
I talk to my friends, and my friends, didn't know that life insurance could be
Nobody
so
nobody really
lucrative.
knows because it's how
No,
it's marketed. They look at
right,
they look at commercials and they'll say, "Oh, get $100,000 worth of insurance for $20 a month." You know,
right,
be be
right, right,
be covered. Don't let your family bury you. But that's
right.
how they're trained. But there's more sophisticated things you can do with life insurance. It's the
Exactly,
safest thing to play with.
exactly. So again, contact James. His website, lutherjamesinsurance.com. You can DM him on any of the social media platforms, LinkedIn especially. And listen, he will make you a boat ton of money, and he will
If you
make
got
it
it, I'll
tax
show you how to
free.
double it.
So don't waste your time. Go to the right guy. And this has been Luther James Insurance. I'm Steve Cully, the best podcast host in the universe. Remember, when life gives you lemons, don't make lemonade. Take 2 oranges, throw them back at life. And I'm Steve Cully, and I'm running for Congress.